Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Yugandharia. We have with us Kunal, Shah, head of Commodities Research, joining in. Welcome to the show, Kunal. Let's start off with uh, what is the kind of move you're expecting with regards to the dollar index, because you have the US elections that are pretty close right now. Clearly, we've extended the upside above those levels of 94, and from here on, ISM data is something which is going to be important to watch out for as well. What are the key levels that you would be tracking on the same?
First of all, in line with what we discussed, there is going to be a lot of volatility and it is going to remain very volatile. So all the instruments such as dollar index, everything will be very, very volatile, and including the bullions. So my sense is that we saw bullion correcting because of risk aversion. So in case after US election, if any of such event is taking place where the Dow Jones corrects sharply, then everything will go down. But my view for dollar index is that this month there are going to be three QEs: one by Federal Reserve, another by European Central Bank, and third will be by Bank of Japan. So lots and lots of liquidity is going to come in the markets. So that brings the outlook of gold, which looks pretty bullish, and I'm of the view that gold will go on quite sharply from present levels also going forward. So I will recommend to buy the dips. So the decline what we see during intraday should be used as a buying opportunity. On Friday also we recommended to go long in gold and silver and short in crude. Today also my view is that around 50,000, 780, 775, one can go long in gold for the upside target of 50,950 to 51,000. For silver also, I will recommend to go long around 61,700 to 650, and for the upside target of 62,350 to 400. And stop loss for both should be for silver 61,250 should be the stop loss, and as far as gold is concerned, 50,600 should be the stop loss. So this will be the stop loss level for both of this commodity. Dollar index, I think 94.40, 94.30 is the hurdle. It should not go above that. And we are going to see again 93, 80, 85. Those are the levels where one can, start going short on bullions.
Right. But with this, Kunal, just a conversation on the dollar. What's the sense? Because there is uncertainty, as you mentioned as well. Volatility will remain ahead of the elections. In addition, there is a lot of conversation going on with regards to the extra fiscal stimulus, which appears relegated at least past the elections. And in the meantime, if you go to see, if uh, the the case becomes that Joe Biden becomes the next POTUS, then what happens? Because after that as well, within a week's time, you have the FOMC monetary policy meeting as well.
So I tell you, Trump or Joe Biden, in both case, the easy monetary policy is going to remain in the market. So even if the Biden comes and if, for example, market corrects, U.S. market corrects, it will be for a day or two, nothing more than that, because the eventually the markets are not driven by Donald Trump or Joe Biden. Markets are driven by the central banks. So central banks remain dominating force behind the markets. So I think no matter what is the outcome, the outlook of gold remains, and the dollar outlook is weak and gold outlook remains strong. So that is my base case scenario. So in case in the volatility you get silver around 57, 58, or you get gold around 49,500, 49,000, that will be a great opportunity. That day you should not call me. You should conquer your fear and start going long.
Right. And then with this, overall, it seems that bears are in full control with regards to where crude oil price action is concerned, because it's it suffered one of its worst monthly declines. It's recorded a 5-month low as well. What's the sense? Do you advise selling right now?
See, as far as crude is concerned, I explained everyone last Monday, Wednesday, and Friday,
Hmm.
and we've seen oil decline by more than 300 rupees. So it is very simple. You don't need to understand demand supply. Europe is closing down. We've seen more and more, even on weekend, Boris Johnson said that he will extend the lockdown. So when the governments are extending the lockdown, that means the transportation activity will remain muted, and hence the demand for gasoline, demand for distillates goes down. So
Hmm.
that was no brainer. am still of the view that oil still doesn't look bright at all, and I'm thinking that we can see some pullback in oil today, maximum to the levels of 26.40, 26.30, but nothing above that. So I will still recommend to short oil at spikes. 26.30, 26.40 are the levels where I would again go short in crude oil. I would put a stop loss of 26.80, and I will again wait for the target of 25.80.
Hmm. Right. And overall, if you see, Kunal, with regards to base metals, it's been mainly mixed. However, and it's a trading range that we've seen. Stronger dollar, demand worries after the lockdown again in Europe. That's something that has been impacting. However, we've managed to hold some ground after the China manufacturing PMI came in at levels of almost around 53.6, because the anticipation was around 52.9 to 53. So we've been higher on that front. Do you think, there could be this kind of volatility or this range bound trade that will continue with regards to base metals, or do you see any breakout or on the downside or upside in any specific metals?
Yeah, so the fundamentals of base metal remains bullish. We were recommending to short metal like copper. It has come down, but nothing significant. No significant downside is what we've seen in copper. But what is happening? I will just explain you. It is the Chinese data. So today was the fifth continuous month where Chinese economy continued to show a lot of strength. So today morning, whatever data came, manufacturing PMI mainly. So still above 51, it is commendable considering the world is slowing down. So the fundamentals of base metals have not deteriorated, but whenever there is a correction or crash or profit taking in Dow Jones, at that time we are going to see some bit of breather. I would recommend copper around 520, 522, good levels to go long. Put a stop loss of 518 and expect it to again move up to 528, 529. The reason for that is very simple. It's the fundamental of copper is not bearish. The Chinese outlook is not bearish,
Hmm.
but due to election, if volatility comes, you may get some dip, and that dip should be used as a buying opportunity.
Right. So that's something that we should be watching out for with regards to base metals as well. Thank you, Kunal, so much for joining in. Thank you, participants, as well. And let's see how much volatility we can embrace as well on the back of US elections, and whether it is Joe Biden or Donald Trump. And that will give us some bit of direction, at least from a sentiment perspective. Thank you so much for joining in.